It's Tuesday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, Andrew Cox is going to give us a shipper update. But first, we're going to go to Zach Strickland with a carrier update, sponsored by Powerfleet. Stay tuned.
Hello and welcome to this Tuesday carrier update presented by Powerfleet. I'm Zach Strickland, and today we are watching our outbound tender volume index move sideways. Whoops. We thought we were in a recovery. We thought things were starting to pick back up, and now we have had a couple of days in a row of sideways volume. So actually we had a slight downgrade over the last day or so, 0.17%, not a huge bounce back down, but it is worth noting that we have seen somewhat of a significant change in the direction of this. Now, we've talked about what momentum is in the market in itself, but you know, we see this dramatic acceleration of downward acceleration, upward acceleration here. From the start of April to the end of April, we had a 25% decrease in volumes, and we've had about an 8.35% increase since that bottom in April 16th. So we have definitely started the recovery process, but by no means have we started to get close to where we were prior to the outbreak. If we go to my next chart, it kind of explained this in a little different way. So this is the weekly change in the outbound tender volume index. You can see throughout March right here, we had a lot of big increases, a lot of week over week, 10% increases, for instance. Now we started to see that negative 10%, negative 15% week over week decrease. This is a good indication of the rate of change of the volumes in the market, because as we get closer to the recovery period, we should start to see this become closer and closer to zero as it moderates moving forward. We're not going to see this tremendous outbreak and breakout periods of tender volumes going above and beyond. So that's going to have a loosening impact to capacity. As this number becomes closer and closer to zero, things will be a little bit more moderated. Tender rejection rates right now sitting and hovering right around 2.6%. So let's go ahead and look at, on my next chart, the rest of the country, see where the volumes are increasing, decreasing. A lot of white on this map. This is our outbound market volatility map. If you look at the whites, those are markets that things are not changing that dramatically. Anything in green is going to have a volatile signal going up. Anything in red is going to have a volatility signal going down. So our markets in red, volumes are decreasing at a rapid pace, statistically significant rapid pace. Anything in green, statistically significant increase in outbound volumes. If you look over there on the left side of the screen here, anything that says strong increase, there's 4 markets showing a strong increase in outbound tender volumes week over week right now. I kind of want you to pay attention to this U.S. market share. Now, these are going to be some smaller markets over there on the right side. Duluth, Minnesota only has a 0.112% outbound tender market share value. So that means that it is one of these tiny markets. It's not going to, even though it may have a statistically significant increase, it's still not that big of a deal because there's still not a lot of freight there. Look down here, you got Phoenix, Arizona. Now this is a market that normally carriers don't like to go into, but it's showing a statistically significant outbound tender volume increase. Let's go to the next chart and we'll see the van outbound tender volume index and the reefer outbound tender volume index for the Phoenix market. Again, this is still a backhaul market. If you look at the head haul volatility marker here, negative 63. Still a lot more inbound freight than outbound freight, but we are starting to see this market grow pretty significantly here over the last week or so. So again, may not like Phoenix still, but at the same time, volumes are growing. And that'll do it for today's carrier update.
Freight volumes. So my first one here, if we skip forward to the next slide. So this is credit card and debit card consumer spending from Bank of America. And the takeaways here from this big colorful chart is that consumer spending has bottomed in almost every category. That is indicated by the lighter colors as we move to the left. And a couple other takeaways is that the stimulus check had an immediate impact. This is the 15th when most of the stimulus checks begin to hit. You can see online electronic spending went up 150% year over year over 2019 at that point. But we've also seen grocery spending come back online in the last few days. After we saw that big panic buying in March, kind of a lull in April, and we've seen that continue to pick up now into May. But you can hear total card spending is only down 15 to 16% over the last 4 days of our data. That means things have picked up greatly over the minus 54 to 30% here a couple weeks ago. So this is a really constructive point for freight volumes. You know, GDP, 70% of it is made up of consumer spending. So to see consumer spending coming back online slowly, that's a good point for volumes. But on the next chart, I have a little bit of a bad point for volumes. So this is the customs data that we have in Sonar. This is just for the entire U.S., and this is in our 2 years of history. You can see that the April number was the highest value that we had. And I feel people might get a false sense of hope if they look at this number without looking at blank sailings for the time after that, because blank sailings are a really important leading indicator for the container line industry. They can almost be taken as a purchasing managers index for the container line purchasing managers. And without getting too much into the weeds about specific blank sailing percentages, the point is that there's going to be a significant amount of capacity taken offline to the U.S. ports through May and through June and likely thereafter.
And Andrew, one of the things that we always chatted about is when we're looking at production kind of ramping up, it doesn't really matter if we're seeing production ramp up overseas. It really depends on that demand domestically, right?
Yeah, it's all about the demand. And the good thing about looking at blank sailings is that you can look at, you can see how carriers really match their capacity with their expected volume throughput. And if they're not expecting any volumes, they're going to continue to blank sailings. And you know, these ocean carriers really only blank sailings for about 6 to 8 weeks out. So a month from now, we're really going to be able to tell if this recovery is going to be quicker than, or as quick as we had hoped. Because we're looking at the end of May, and these container lines are extending the blank sailings through the end of July and into August and September. That means this recovery is going to be pretty slow. But again, vice versa, if they don't blank those sailings, we can expect a lot more import volumes to pick up there in June, July, and thereafter.
And kind of going back to one of your previous charts, when we looked at different industries that are being affected the most, we can really see that the consumer goods sector, especially with electronic spending, electronic ordering online, really being a part of the economy that seems to kind of really be holding steady compared to a lot of the other segments.
Yeah, we've talked about how durable goods are likely going to take many more quarters to recover, but we've seen small appliances and small electronics really pick up demand and really carry some of the consumer spending for the last few weeks.
Andrew, thank you so much. Insightful as always. And thank you so much for tuning in. That's going to do for this segment of FreightWaves Now. But stay tuned because we're about to go live on some demos. Be sure to check out that section with our first block.